basically what I'm looking at Bitcoin, right, is I'm looking at Bitcoin going to the 200-week SMA. And where can I start with this? Well, I can start with this chart here. This is the Bitcoin Liquid Index, which goes over the long-term price history of Bitcoin. And we can bring up the 50 and the 200, which are these red and green lines. The red line is the 50-week SMA. The green line is the 200-week SMA. What we see historically is that every time Bitcoin loses the red line, every time Bitcoin loses the 50-week, we end up with 200. We lost the 50-week here in 2018. We dropped down 25% in 4 days. Bounced back up to the 50-week, rejected off of it. That was, 4 weeks. Rejected off of it. That was 5 weeks, 45% to the upside. And we ultimately ended up rejecting, and we ended up at 200 about 3 to 6 months later. Okay, and then looking at what's happening in this 2022 period, exactly the same thing. And this also happened in 2013. It's just not as clear as a fractal, so I'm not going to show you, but it's pretty much a very similar thing did happen. We lost the 50-week. We went down for 4 weeks, just like in 2018, 32%, pretty much just like in 2018. And now we're seeing a bounce back up to the 50-week for a rejection off of it and then heading down to the 200, in my personal opinion. Now, I don't think it's going to happen in April. That was a bit of a vertical line. I think that depending on what happens with interest rates, if interest rates have a severely negative effect on the market, we could reach it much sooner. But as of right now, I have no reason to believe we will be reaching it any sooner than November. And the reason I've come to November is because of the fact that there is a lot of 4-year cycle theory stuff playing out that leads to November. Let's just go over briefly here and we can kind of take a look at it. Well, first and foremost, this is actually going to take a long time, but first and foremost, let's draw this all out. What we can do is we could draw kind of lines from the bottom to the bottom. So the bottom in 2015 to the bottom in 2018. The only thing is I can't see it very clearly because the thing's there, but should be around 1,400. Okay, and then we can draw the bottom in 2018 to the supposed bottom in 2021, which should be in November, so 1,400 and something. We can go top to top from 2013 to 2017. That's going to be 1,400. Same thing, top to top, 2017 to 2022 or 2021. 1,400 again. So the number 1,400 comes up many, many times. And then expanding upon that, this might get a bit messy here, guys. If we go bottom to top, it's 1,064. And then if we go bottom to top again, I can't really see the bottom two precisely, but if I did it perfectly, it would be exactly 1,064 as well. So that's a messy chart, but you get the point. There's a lot of numbers that keep coming up. It takes 3 numbers or 3 sets of data to make a trend. We have 5 there, and so the trend is very well formed, and that would suggest that we're going to be bottoming out on Bitcoin in November. Okay, so that's a very compelling piece of evidence there. If you want a full explanation of that, and more a bit of an in-depth explanation, you can go ahead and check out my video on it. I did a few weeks ago. It should be pretty easy to find on my YouTube channel. It's called Something to Do with Cyclical Theory. And so if we go on the daily chart now, just expanding upon that 200-week SMA prediction. By the way, a lot of people would get me confused. When I say 200-week SMA, I don't mean Bitcoin's going to 20K. I mean it's going to the 200-week SMA, which could be anywhere from 20K to 24K, depending on where we get there. Okay, it's very hard to say exactly where it will be. But this fractal is actually sensational. It's very accurate. Now, this fractal was taken directly from the 2018 dead cat bounce region, and so it's very relevant, right? Because we're in a similar structure right now to what we were in 2018 in terms of what we're doing in the charts. We're dead cat bouncing, essentially. And what we've seen in 2018, and this is part of the reason why I think we're going to see a further bounce here on Bitcoin, but I'm not betting on it, right? I'm not betting on anything, but I've said that. I made that pretty clear in previous videos. What we're seeing is, well, September was identical. This area of kind of contention here was identical. The double top was identical here. The drop was identical. We had 1, 2, 3 areas of kind of consolidation that were all pretty much identical. The bottom was identical as well. And on top of all of this, we're seeing an inverted head and shoulders pattern. Yes, it doesn't look the same as the purple fractal, but we saw an inverted head and shoulders pattern on the fractal as well. So this fractal is literally groundbreaking. Like I can't think of a more accurate fractal. If you gave me a chance to find one more accurate fractal in the whole any financial market, I wouldn't be able to give it to you. This fractal is extremely, extremely, extremely accurate. I found it by accident. I haven't seen any other YouTuber, any other crypto Twitter person who have found this fractal. This is exclusively a Wolves of Crypto thing. Right? So if you're seeing this right now, This is something you won't see anywhere else unless someone stole it from me, all right, or unless they found it in the period of time that I found it since. But I have not seen anyone post this fractal before, and it is quite seriously the most compelling fractal I've ever seen in a financial market. And it would suggest that we go upwards a little bit more here, and I really wouldn't be surprised if that happened, okay? But I don't think we're going to go to 56k, okay? And if you take this relative to what happened in previous cycles, this 56k region here, adjusted to current prices, was actually just a rejection of the 50-week SMA. And for that reason, I think we're going to go to the 50-week SMA, which is at 48k currently, okay? And where is 48k on the chart? Well, 48k going on the Bitcoin chart is this bold blue line. I'll make it a bit more bold so you can see it. This is 48k. I think we will most likely, doesn't need to happen, right? Obviously, it doesn't need to happen, and I'm still going to be bearish if this doesn't. But I think it will most likely swing up to 48k here on Bitcoin and test that region for resistance. Now, again, I'm not confident enough in that prediction to bet on it. I'm not entering the market at all right now, but that is what my educated guess would be at this point in time. So yes, it wouldn't be surprising at all if we touch 48k and then reject downwards. But if we break 48k on the other hand, we get above 48k, we flip it, we close the weekly above it, that's a sign that the bullishness is returning into the market, and we could be seeing a bull market continuation. At that point, we'd be starting to target higher regions like 53 and potentially even all-time highs. But until we get over 48k, it's literally just a bearish chart. That's just as simple as that. Why is it bearish? Okay, why is it bearish? Well, first and foremost, and one of the most important reasons this chart is bearish is because every single time we move upwards, every single time we have a dead cat bounce, the green candles have descending volume. We saw it here, okay? We saw it here, descending volume. And we didn't really see anything else, actually, because there's been no more bounces. But the point is, if you go back to Bitcoin in 2018, if you go back to Bitcoin in 2014, after the bull markets, in their dead cat bounce regions, what you will see is that every time you see a dead cat bounce, which is basically a bounce that doesn't lead to new all-time highs, so a bounce on the way down, you see descending volume on those bounces, which means that the bounces are unsustainable. When you see descending volume in an upwards trend, it means less and less buyers are interested in buying at those higher prices. It means the momentum is running out. It doesn't necessarily mean that it's going to reverse instantly, but it means that slowly, the momentum is drawing out, and eventually the bears are going to take back over. It's one of the most accurate signs that a trend is unsustainable that you'll find in cryptocurrency, in stock market, in anything, right? Forex, same thing. And so now that we've established that volume is low, that is probably one of the points that I would consider when kind of assuming that, hey, Bitcoin might go to 48k, that would be against that. Now, if we do go to 48k, I would expect the volume to be still declining. I think that we can get there regardless, though. The point is, what I'm trying to make is that we're below everything right now. We're below bull market support, okay, which is a potential rejection zone, which kind of indicates to me that, hey, we might not actually come all the way to 48k. We might come to 46, for example, but the point is, I think we're going to see a little bounce. We're below Ikomoku. We've actually rejected off the Ikomoku, and if we get above 48k, we'll be breaking through the Ikomoku, which again is evidence that we won't be doing that. We're above the 50 and the 200. No, we're not. We're actually below the 200, but we're above the 50 right now. We've been holding it for support for about 4 days, and we've seen a green candle off of that, which is good to see. A little bounce zone there, which would suggest we see a further bounce. As for the VVPR, which is the volume profile, the POC is at 46k, and so 47k, is a major area of resistance just around 48, which makes sense. And we're below, for example, the Gaussian channel, and on the Bollinger Bands, we've just rejected from the top line, and now we're coming down towards the 20-week, which is the center line on the Bollinger Bands. So just to summarize, I really wouldn't be surprised if Bitcoin jumps up to 48k before rejection off the 50-week and lower prices, but it doesn't need to do it. And so I'm not willing to bet on it, but I wouldn't be surprised, okay? So that's my kind of prediction. It's very vague. I know, I don't like being vague, but that's all I can give you right now. I've been pretty precise with my prediction about the 200-week since about 58k to 63k, right? I don't need to be more precise about random short-term price movements. That will be over within, 3 weeks. It doesn't really mean much to me at this point. But as for the charts, we can see that if we don't start moving upwards soon here, we're going to come crashing down. The reason being because we're seeing a bearish MACD cross start to form out. We haven't seen any bullish divergence at all on the RSI. Nothing's really happened there. And the stochastic RSI has topped out. Now, stochastic RSI is very debatable as to how strong it actually is, how much effect it actually has. But what we can see is that the last few times it's topped out, it has led to a major correction. For example, we topped out here and we led to a big drop there from around 66 all the way down to 53. Topped out here, we went from 53 all the way down to 42. Topped out here, we went from 52 all the way down to 43 in a matter of days. Topped out here, we went from about 43 all the way to 33. And now we've topped out again. So, the point is, even though it's not accurate 100% of the time, it's still pretty accurate right now. And in the past, it's been pretty accurate. So we have to take it into consideration. And that would be another piece of evidence supporting the theory that we don't test 48k first. And so, as you can see, lots of evidence suggesting we drop now, lots of evidence suggesting we top out at 48k and then drop. Not much evidence at all suggesting that we go above 48k, right? So even though I'm not 100% sold on each scenario, what I can say is that the scenario in which we come up to all-time highs is very, very unlikely at this point. Very unlikely. And just expanding on this further, and then we'll look into some charts, some questions, sorry. We have this, sorry, one second. And we'll go into the short term as well, actually. We have this prediction chart that we've made about 2 months ago. We haven't touched this since. And this is my initial prediction when I made this probably, January, early January, so about a month and a half ago. And I predicted that this orange scenario would most likely play out, but we also did have this yellow scenario here, but the orange scenario was always more likely. Predicted we come up to 55k, reject from it, we did that. I predict we come down to 40, but we've actually come down to 42 instead, or 41. So just below, just above 40. And then I also predicted after that we'll come up to 48 for rejection before rejecting. Okay, and so we haven't done that 48 move yet, and I think it's probably the likely move to happen. So let's see what happens in regards to that. And I want to look at one more chart on Bitcoin. And that chart is going to be a fresh weekly chart. Let's look at 2 more actually, and then a monthly chart. I'm just trying to find a fresh one here. So we've got the weekly here, for example. Let's grab the weekly on the Bitcoin Liquid Index, and we can look at some indicators on the weekly other than these fractals that have played out before. So some indicators would be the Ichimoku cloud. Right now, we've actually failed to close a weekly candle above the Ichimoku cloud, and we've had a big rejection, right, in form of a long upside wick, which is very bearish. It means that the price goes up very, very high, and it gets sold down very quickly. There's a lot of selling pressure above us. Every time you see a long upside wick like this, generally leads to a downwards trend, okay? Doesn't mean it's going to happen immediately, but for example, what happened here in October, a long upside wick, we had 3 more upwards candles, but it just led to a crash, right? It just means it's an early sign that the trend is unsustainable. Not a good sign at all for Bitcoin. On top of that, we have Gaussian channel, which is slowly flipping red, right? We've just jumped above it a little bit. We did that in 2018 as well in a very similar fashion, and we closed 1 candle above it. So let's go back to 2018. So what we saw there, we saw in 2018 that, hey, this was mostly about to flip red. We came up above it, we closed 1 green candle above it, and then entered the downwards trend more and crashed down to the 200. So if we did something similar to that, this would be the only green candle on the weekly chart that we would close above the Gaussian channel. Let's see how it plays out. It might play out like that, it might not. Let's look at the Bollinger Bands, not much to talk about there. And in terms of 50 and 200, you guys already know all about that. Okay, so very simple stuff there on Bitcoin on the weekly chart. Now, looking at the monthly chart, this is very interesting as well. We don't look at the monthly chart too much because it's a little bit of a too long-term view to be accurate, right? Lots of things happen on the monthly chart that just have very little effect because it's way too long-term. But essentially what's going on the monthly chart right now is not much in regards to anything other than the MACD cross. We've had a monthly bearish MACD cross. We've crossed bearish. Last time we saw that was in 2018, and before that, the last time we saw a bearish MACD cross on the monthly was in 2014. So basically, every single bear market, which is only 2, by the way, has been started by a bearish MACD cross on the monthly chart. We've just seen that happen, and that would indicate that we're entering a bear market here as well. There is a large amount of evidence for bear market, not much evidence for a bull market here on Bitcoin. But that is the Bitcoin analysis. That's wrapping it up there. And to kind of wrap it all up, what we do is we go back to the daily chart, my base chart on Bitcoin, and then we can start answering some questions here from the chat. So for the YouTube viewers, thanks for watching the Bitcoin video, and I'll catch you in the next one for the live stream. Let's jump straight into some questions.